Hey folks, good morning. Good to see you. Yes, I am still in my daughter's bedroom. Yes, we changed out the artwork as she's getting ready for college. Glad to see everybody. Go grab some coffee. Make sure you click that share button. We will get started here in just a minute. Good to see folks from all over the world already on, which I actually love to see. This is just making me want to travel more, to be honest. All right, from a timing standpoint, why don't we get going, everybody? Good morning. Welcome to the 41st episode of FinTech Insider, the Breakfast Show US. I'm Sam Maule, 11FS Managing Director, North America. I'll be your host for this morning's show. Do let us know where you're watching from. We'd love to hear where our viewers are based. Please share the link to the stream, hit the like button, and please subscribe to 11FS on LinkedIn so you never miss a show. And if you haven't read our latest research yet, the link is in the post, but it's really fantastic. It's about the needs of SMB owners in the U.S. and how financial institutions can make propositions to better serve them. Head over to bit.ly/DIGITASMB, or just click the link. It's much easier. All right, first off, 3 news stories from the past 24 hours that caught my attention and should have yours. First one, TechCrunch reports amid unprecedented growth on its platform, Acorns cuts roles and shuts down an office. Acorns, which helps millions of people invest their spare change in the stock market, has laid off between 50 to 70 people, TechCrunch reports. It says they've learned this from multiple sources. The news emerged days after the fintech company closed its Portland office earlier this week, one of 4 offices the company maintains. Acorn has found unprecedented growth as the coronavirus brings in users into its world of investing and savings money. The company recently hit a milestone of 7 million signups, continuing the trend that trading apps are benefiting from a down market. I am an Acorn user. I find it to be quite convenient. I'm not surprised personally by the layoffs. I mean, we have 40 million people unemployed. What do you expect? Second story, and I found this one fascinating. I read it this morning. It was in the New York Times. It's reporting poor countries face a debt crisis unlike anything we've ever seen. So dozens of countries that borrowed from private investors have debt payments coming due as their economies have crashed because of the coronavirus. A group of 77 poor countries are scheduled to make interest and principal payments of $62 billion on their debts this year, according to calculations by an economic professor in Geneva. That's going to be an issue, folks, on a global scale. Read the article. It's fascinating. And even closer to home, CNBC has a story this morning that stock futures are slightly lower beginning June as Wall Street aims for a 3rd straight monthly advance. As a matter of fact, I was just looking, the market's up about 25 points this morning. Last week's gains led the major averages to their first back-to-back monthly advance since late 2019. The Dow and S&P gained 4.3% and 5.3% respectively. So taking into consideration that we're living through a global pandemic, over 100 million Americans have died from COVID, and that the U.S. is in the midst of a national protest going on. We've had over 4,400 arrests reported. We've had riot and looting in several cities now that have occurred. How the market is running like it is, I have no clue, but we're going to talk about that a little bit on the show. So today we're happy to be joined by Rob Blackwell. Rob is the Chief Content Officer and Head of External Affairs at the Promontory Interfinancial Network. On today's show, we're going to talk about the U.S. upcoming election. We're going to talk about the stock market. We're going to talk about wherever we want to go, and we will talk about Rob's podcast. So Rob, very good to have you on the show. How you doing, man?
Doing well. Thank you for having me on here.
And a nice headset. By the way,
thank you. Yeah, I'm rocking the 80s look here.
I have headset jealousy going on right now. Do me a favor, because I do want to talk a little bit about your past, but let's talk about what's going on right now in your life. So you've moved over to the Promontory Interfinancial Network. What is that? What do you guys focus on?
All right. So it's actually one of the original fintechs. It was founded in 2002 before fintech was a term. Yeah. And it helps with basically cash management, offers cash management. It's a network of 3,000 financial institutions, so more than 3,000. So banks, fintechs, broker-dealers. And a lot of what it's doing is enabling folks to offer, I mean, in the case of banks, they can already offer checking and savings accounts, right? But they can insure money, offer FDIC insurance beyond the $250,000 limit by using banks within our network. We have something called reciprocal deposits where we're swapping deposits between networks. But this also enables us to offer broker-dealers, offers fintechs to be able to offer checking and savings deposits to their customers, all through a network that can also offer large deposits, that kind of thing. So it's cash management. It helps people enable interest rate risk and handle liquidity risk And it's a great business. It's done a lot. Like I said, more than 50% of banks are now part of the network. And so over 3,000 financial institutions. And it's, we work with small, medium, big, everybody. And one main reasons we're so successful is we treat everybody the same. So if you're a small community bank, we will help you out at the same service that we offer the biggest banks in the country.
And, I can already tell by the audience that's on. We got a ton of people on that are all saying hi, Rob.
Hey, hi.
Rob is well known in this space. I'll just say that because he's been around and a voice for this space for decades now. How do you like me saying that, Rob? Decades. Damn it.
2 decades. It never. I'm old. You can tell. You got me on video, so you can see my gray hair.
Yeah, it's all right. But
I mean, maybe the picture that didn't have it. I look about 10 years longer. It's nice.
Yeah, AI is not good enough yet to where we can put a different face. Because it would be like Brad Pitt and George Clooney having a conversation right. For everybody. I know we're both handsome men, but but he is. You're well known in this space. I mean, you spent almost 20 years at American Banker, starting as a reporter all the way up to editor-in-chief, by the way, everybody. To really, I would say in the US, you've got, and globally, you've got the Wall Street Journal, you got American Banker, right? If you're in this industry, that's what you're reading every day. I'll say that. So here you go, Rob. I just kind of want to go there, and then we'll talk about some of the other stuff you do. So that last story I just read, with the market, like I said, up 25, 30 points. It's up around 25,000 now. We've got a disconnect in multiple vectors of market, multiple industries, and in multiple social classes. I think it's safe to stay in the U.S. right now. You're in Arlington, just outside of D.C., right?
I am, yeah.
All right. I'm in Jacksonville, Florida, folks. Jacksonville is not like the greatest hotspot in the world. It's a nice, easy place to live. We went on a mandatory curfew last night because of the potential for some looting and rioting, which we saw 2 nights ago here. DC was on fire last night,
literally.
As Rob can tell you. Literally on fire. Some of the overview shots of DC, that's all you could see were just these fires breaking out. And that's happened all across this country. So how do you balance that with the market being up today?
I can't. I've always known, I think it's well known that the market's completely irrational, and it seems to be just even more so now, living in this weird world that we're not living in. You got riots across the United States. You got a pandemic that's still a problem, and yet the market seems to be acting like it's no longer a problem. You have 20 million people out of a job, and we have historic job losses near the level of the Great Depression. I cannot explain why the market is reacting to that as if it's no big deal and this is what they expected. I have to imagine that at some point the fever breaks, but I don't really know. It's unfathomable to me.
Yeah, very interesting analogy. The fever breaks, because we do have the COVID pandemic happening at the same time that thousands of folks are out protesting. It just seems like a series of, what's the book? Lennon E. Snicket, The Series of Unfortunate Events, that all, and on top of an election cycle, right? We have a presidential election coming up. We have the debates going on and whether or not we're going to actually hold conventions like North Carolina and the GOP convention actually happening. We're seeing so many things shaken up, and I agree with you. I flat out do not understand the market. And by the way, Will Hernandez, who's on, nice to have you on. Rob, little shout out from Will. He says you're an okay guy.
Hey, Will, I'm okay.
You're okay.
I'm not better than okay. I'm just okay.
You're okay, and we like that.
It could be better.
Yeah, and man, we've got a million comments around this. What we were just talking about with the market. So, for example, Jeff Marciusco, and I'm probably slaughtered your name, Jeff, and I apologize, just said, that's why treasuries are yielding so low in spite of U.S. issuing trillions of dollars, which has been done. I mean, what do you think of the Fed's response, Rob, over March and April?
I have been consistently impressed with the Fed.
So have
I am a big Fed fan. I mean, they're actually a really hard organization to cover as a journalist. So that has been true. But I got to say, I was watching a stream with Fed Chairman Jerome Powell last week where he said, he was asked basically, why are you doing so much? In some cases, even stretching the legal authority of the Fed. And he said, well, listen, I'd rather do too much and explain why I'm doing it to the people than sit on my hands and have to justify while we're just sitting here to the public. And that's a good attitude. I think that's the right attitude to be taking. The Fed has been trying to throw anything it can at this. That's not to say that there haven't been mistakes made, that there are not perhaps flaws in the system. The Main Street lending program really has got to get up and running, and it hasn't happened yet. So I'm not, giving a blanket endorsement to everything that's being done, but kudos to them for doing so much as they are and trying to really fix this economy before it just craters in a way that it can't recover for years.
Do you think that's a lessons learned from 2008?
Yeah, I think so. Ben Bernanke was the Fed chairman then. It's funny. Yeah. I had a conversation with him once after all this was over, and he said to me, it was something that he made a joke, and it's funny. He's not known for being a funny guy, but he said to me something like, we could either sit on our hands, it was the same kind of thing, and watch the economy go down in flames, or we could do something about it. So we decided, what the hell? And I think that was the Fed's lesson really out of the Great Depression, where they sat by and did nothing. Yeah. And we were stuck in a depression for 10 years, and they didn't try and handle it. So I think in 2008, Ben Bernanke tried to handle it. And now in 2020, you've got Jerome Powell really actively trying to handle it. And my big fear is what happens to Jerome Powell after the election, really.
Yes.
So we can talk about that.
Yeah, I'd like to talk about the election next. But I'd like to get your feedback on this. So you have the Fed's response, and then we have Congress response. So again, we've had PPP, which has had its highs and lows. If you had to give a grade, a sliding grade between A to F on the response by the Fed to date and the response by Congress, how would you rank it?
Okay, so for the Fed, I would give them an A for effort.
Wow. I agree.
I just, it's not to say everything's going to work, but they're trying, and you can sense that they're trying. Congress is really hard. I think I'm tempted to give them, they responded quickly at first, but in this kind of crisis, you really want people to be doing too much rather than too little. And that's my great fear here, is that there's sort of this thought process now, and you're seeing it from Treasury Secretary Steven Mnuchin, that, well, we've done enough. Let's see how it all plays out. And I worry that we haven't done enough. And by the time we know that's true, it'll be too late. So Congress, B-, because they passed 3 bills. They're working on a 4th, but I'm not optimistic that it will be sizable enough to have the impact it needs to have.
I'm dead on with you. I gave the Fed about an A-.
Okay, that's fair.
The volume of things that they pushed out the door, and let's be honest, the markets didn't tank completely, right?
Right.
I give Congress, I was going to go with about a C or C+. I don't think it's fair to crucify them yet. They tried. No,
I wouldn't give them an F. I mean, they're clearly trying to do something.
Yeah, and I agree. And especially in our current political environment, the fact that Congress got anything done and that rapidly, they get some credit from me. I think there's a ton more they can do. So let's talk about that a little bit. And folks, keep pushing the questions in. I'll get to them. And yes, if I said 100 million in the U.S. died from COVID, no, I don't want to be called fake news. About 104,000 is the latest estimates. Don't let me misspeak that situation. What I will say is I personally know about 6 people that have passed away so far from it, and it hurts. And Rob, I think we all have kind of been in that boat. Let's talk about the election. All right, you and I are political junkies. You're in DC. Yes. You love, and it's safe to say you love the political side and impact on financial services. Is that a fair comment?
Yeah, when I came to the banker more than 20 years ago, I thought I was going to stay there for a year and then go work on maybe CQ or something like that. And I ended up staying 20 years because I got really into the whole policy and how politics, how it affected financial services. Yeah. It was just way more fascinating than I thought. So I became a total financial services policy nerd. All
right. So I'm a nerd too, and I'm a geek when it comes to politics. So we have an election cycle coming up. Yeah. As everyone knows, presidential election. So, and man, you couldn't, if they wanted to do this as a movie, the script would be unbelievable, right? The fact
you'd fire the writer. You'd fire the writer.
You would. You're like, go right for McGruger.
There are too many crises in here. You can't have a pandemic and the streets in flames. That's just too much. Yeah. It's crazy. You can't do that.
Yeah, let's make it even better, right? So you have a global pandemic, a trade war with a global superpower in China, You know, an American populace that, if you look over the past several election cycles, are very divided and pretty consistent too, right? The winning margin is not that great for either party when it comes through with this. So it really hasn't changed much. And now you have a national crisis like we're going through right now. So pile those up to say, and by the way, we have a presidential election. So if you don't mind, a little bit of a prediction here. So let's say President Trump wins again.
Sure.
How do you see economic policy for the next few years under a GOP president?
You know, that's really hard to answer because I don't know how, you know, what the next 6 months plays out like.
Yeah.
And the real problem is that there isn't a lot of consistency from this administration. They swap people. I mean, Secretary Mnuchin has been one of the few constants. But
are you surprised by that, by the way? Because going in, I
thought, yeah, a little. He seems to have been walking that line between, you know, making sure that he stays on the right side of Trump and not getting crosswise with him, but also, you know, maintaining enough credibility that there's a feeling like he can still move markets, and he has been trying to, you know, advocate a response. But right now, like I said, he's in the position where he's saying, yeah, I don't know if we need any more. Right. And I think that's the big question that I have going into, does the Trump administration do more when, you know, in November 3rd? Because I don't think it's going to be over, and we have a possible second wave of the virus coming in fall. It's still happening now. So there's a real question in my mind of how much they're willing to keep throwing money at the problem. And frankly, they've been so decentralized in their approach anyway, wanting to push everything off to the states. Like, the states need to fix it. And I mean, I just wouldn't expect that. Normally, I watched George W. Bush handle the financial crisis, and there was no sense from him that, you know, this was someone else's problem and it needed to be handled. I watched TARP go down, but there was this least idea that, you know, we need to be doing something. We need to be out trying to fix it. And I don't know. There's a sense from the Trumps is tired of COVID and that he wants to fix the economy, but he's not really sure how to do that. And I think, again, the big issue is, does he fire Jerome Powell, and what happens when Jerome Powell's term as chairman is up? Because that's going to be up in Trump's second term if he has one.
Hey, if you don't mind, for a European audience and global audience that's watching this, can you talk a little bit about the relationship between Jerome Powell and President Trump?
Sure. One thing to know is that the Fed chairman is selected by the president, and then they're confirmed by the Senate, and they have a term of 4 years as chairman. They have a longer term as a board member, so you could actually get into a world where Powell is still on the board, but he's not chairman. And just to talk a little bit about the relationship. Now, Trump nominated Powell at the behest of Secretary Mnuchin, and he was confirmed. But since that time, Trump has openly said that was a mistake. I shouldn't have done that. I don't like Powell. He's been really pushing Powell to go lower in interest rates. And then when interest rates hit zero, he's been now pushing them to go to negative interest rates, which Powell has consistently said he doesn't want to do, and would have all sorts of impacts in the United States. That's something that's being tried elsewhere. And the Fed has really drawn a hard line saying we're not going to try that. But he's been consistently putting pressure on him. And he will get a chance if he doesn't choose to fire the Fed chairman. Now, I don't think he legally can, but that hasn't stopped President Trump in the past. So he could try to do that and start a lawsuit, or he can just wait until Powell's term is up as chairman and then try and bring in his own person. And there's some board politics that get really complicated in there. But nevertheless, I would expect him to try and push Powell out. And that's why I think the market isn't totally rational, because I think they view Trump being reelected is kind of maybe ho-hum. We'll see as it gets closer if that becomes something that's reflected in the polls. But the thought process is maybe not thinking it through a little bit, because the market likes Powell. They like what Powell's doing. And I expect that to stay the same. So if you get rid of Powell, I think you could have a really bad reaction in the markets. And that would be the only thing that would save Powell's job, is the feeling from Trump's advisors that, look, if you do this, you could make everything worse. But I think Trump himself definitely wants to replace Powell.
Yeah, just listen to what Trump has said about the Fed and Powell. All right, sure. And so y'all can do your own research. Easy enough to do. Google that, and you'll get 1,000 hits. Let's flip this. So let's say Vice President Biden was able to pull off a victory. How do you see him setting up? Do you see massive change coming in, or in reality more than normal? Do you think he'll approach this like President Obama did?
I don't see massive change.
Yeah, I don't either.
I think this idea that, I mean, listen, he's not Bernie Sanders. He's not even Elizabeth Warren, who keeps talking about big structural change.
Yeah.
It's not that I don't think anything is going to happen, but I think he's a fairly different person. One of the things he's really going to be trying to do is bring the country together. I mean, you have a president right now that's sort of actively fanning the flames of some of these protests and generally playing to the base, right? Which will be a divisive move. He thinks that's going to get him reelected. So that's what he's doing and why he's doing it. In Biden's case, he thinks, by pitching himself as the moderate, the uniter, the healer, that he can do that. So it's not that there will obviously be a more leftward tilt, but I don't think you're going to get some of the radical solutions that people are talking about. Like, they're not going to come in there and break up the big banks or have these sort of really far left policies. I think Biden will have to walk a fine line between pleasing liberals who want a more liberal leftward tilt, but he's also going to want to maintain that idea that, look, I can restore us back to how we were pre-Trump. I can bring us together. Don't you remember what it was like to have a president that didn't tweet, mean things a lot of the time? And so a lot of his message is going to be inherent in let's get back to where we were. And so as a result of that, I don't see radical change coming out of a Biden administration, not for banks and not in terms of financial services policy. I see a lot of it around the edges. I think the big thing will be the regulators that he picks to regulate financial markets. Yeah,
I would agree with you, right? I mean, you look at what's happened with the market, let's say since about 2014, and where it's at. Pre-COVID, we all knew what the world looked like. And what the U.S. economy looked like, I didn't even, and by the way, I didn't even add that into the script for this story of having 40 million people in the U.S. unemployed. Isn't that amazing, Rob? I forgot that part when we're talking about everything going on in the world today between the protests and the riots and COVID. I forgot to mention 40 million people unemployed.
If this were a TV show, you would definitely. You would have lost patience by now and thrown up your hands and walk.
Yeah, it's the airport skit where the guy says, "I picked the wrong day to stop sniffing glue."
That's exactly right. Yeah.
that's exactly. We're all that guy
constantly.
Right now. Yeah.
Someone compared it to that Battlestar Galactica episode where the Cylons attack every 33 minutes, and you never get a chance to take a break, and no one gets a chance to sleep or eat or anything. And that's definitely how the news cycle feels. It feels like an assault.
Yeah. So just for everybody to show what a geek I am, the episode that Rob just mentioned was the actual second episode of the series, which is considered one of the greatest written episodes ever. 33.
Yes.
It was called.
It's just a terrific episode.
Yeah, we're geeks. And I understood that reference. Everybody go watch Battlestar Galactica. It's fantastic. The 2000 version of that. Right. Jeff had another good point, and there's a couple questions. I'm going to run through these really quick, Rob, and get your response. So the second round of PPP didn't sell out. I'm hearing from bankers that Fed's Main Street lending program will have tepid response. Perhaps Congress can take unused dollars from existing programs and redirect. Think it's going to happen?
I think Congress gets one more shot at making some of these changes. They're debating PPP changes now, and I think that'll happen. And then they're going to do a big bill if they can before they adjourn. But remember, Congress is on a tight deadline. The closer you get to the election, the less they're going to do.
Yes.
The less they're capable of doing. And frankly, the fact that they were even able to get this far is something of a miracle, and just shows you what kind of a, unprecedented times we're in. There's this feeling from both parties that they don't want to go home and say they did nothing. So that would be bad. So they're going to try and do something. So yeah, it's possible. I think you could see something if that idea gains traction and enough time for that fourth bill to come through, 4.0 version of the CARES Act, or whatever you want to call it. To happen. I think you could see something like that. I do agree with your idea that Main Street lending, they have tepid response. The loans were set kind of high. It's really not for Main Street. It's sort of misnamed because it's for much bigger companies than when one would consider, your mom and pop hardware store on the corner.
Good question for Corey LeBlanc. Okay, Corey. Rob, do you think we'll begin to see more progress or guidance in the regulatory and compliance sides of the open banking conversation as a response to the potential rapid increased change in the habitual way people want to interact with their banks?
I think open banking is one of the big things that I really thought was going to be gaining traction this year. Coming into 2020, we did this analysis over at the Banker. I was still over at the Banker, which is what banking was going to look like in 2025. And open banking was one of those big issues that regulators were going to have to tackle. I just don't know how much that gets put off by things like this. I think there's a lot of the agencies are in survival mode. And remember, they've got to worry about credit quality when we're coming into the third quarter. I mean, banks had, record capital, record liquidity coming into this crisis. They're way better off than they were the last time. But you have a problem, which some of these credits are going to start going bad, and that's going to really start hitting in the third and fourth quarters of this year. Yeah. So you could see a credit environment that's very different than what we're looking at now. And this speaks to the market being irrational. I mean, bankers have been open about saying this. On my podcast tomorrow, we've got the chairman of Citigroup acknowledging that, the third and fourth quarters could be challenging. And it's just amazing to me that, the market is reacting, sort of shrugging it off as if it's no big deal, because it's potentially a very big deal.
Yeah. And I'm glad you mentioned the podcast. So let's touch on the podcast a little bit.
Sure.
A great name. What was the name you settled on?
Banking with Interest.
You should have heard some of the other names, folks. Rob picked the right one for one. Great name. And it does sum it up. So I think your first interview was with Jill Castilla, who is going to be on later this week again.
She's fantastic.
She is fantastic. And then following up on that, your second interview was some dude named Mark Cuban.
Yes, some guy.
Which I found to be hilarious, by the way. That's how you start off a podcast, everybody. You pay homage to Jill, and then you get on Cuban. Nice job.
That was a stroke of fortune. What do you say? I even thought, should I start a podcast now in the middle of the pandemic? And I just thought, well, it's okay. We're going to keep it small. We're going to keep it homey. And my first guest was a guy named Cam Fine, who used to head ICBA. And then my second guest was Jill. And then everything kind of snowballed from there. But tomorrow we have the program, John Dugan. He's the chairman of Citigroup. He's the former comptroller of the currency. And then we usually just do one show a week, but we're going to do two because I'm talking to the new comptroller of the currency who just started last week. I'm going to talk to him tomorrow. And so we're going to have a podcast out with him on Wednesday and get to ask, how he's going to regulate the banks going forward. I mean, he's now acting comptroller and potentially the full comptroller, depending on how things shake out.
Well, what was I found Mark Cuban to be very interesting because he has made a lot of noise since the COVID crisis and economic crisis has kicked in. I mean, a lot of noise.
Yeah.
He's been on every podcast.
Yes.
He's been on Karis Fisher's. Yes, we did talk to Mark. Unfortunately, the NBA looks like it's going to start back up. So suddenly his squirrel effect is, he's focused on the Mavericks.
Right.
But still, I think if you marry up your interview with him and then Karis Swisher's interview with him, you get an excellent snapshot of how Mark would have approached PPP and what he called for. Did you feel, I know you asked him the question, but do you get any undercurrent that he would like to run for president?
I did. Yeah,
I did absolutely. Too. I sensed that. Yeah.
He absolutely wants to. It's a question of where he thinks his window is. I don't think he has a window this year, and I think he knows that. Yeah. And then, 4 years from now, who knows? It's too hard to know. The problem with running an independent bid is it's just really difficult. He's sort of playing on he'd almost have to run as a Democrat, but you can't run as a third party candidate. It just never works.
It wouldn't work. He would have to disrupt as Trump did.
Trump took over the Republican Party was sort of his way of handling it. Like instead of running as a third party candidate, he became their candidate. And then a lot of people said, well, don't worry, Republicans won't really like him and get along with him. And that hasn't been the case at all. He's really moved them, not the other way around.
Yeah, I think it's safe to say, and I'll say this to the audience and I'll say this to everybody, whatever the playbooks were back around 2015, rip them up, just across the piece.
Yep.
The rules are all changing. We've had questions in this string that were all great about, what do you think the impact of COVID is going to be on financial services? What do you think is going to be on multiple verticals? We always talk about that. Folks, believe it or not, we've run out of time. Here's what I would tell you to do. One, and Bianca, if you don't mind, go out there and look for it. Banking with Interest with Rob Blackwell. Grab the URL and toss it in the comments, and I'll just keep talking until I see that show up. Listen to Rob's podcast because it's as good as the work he did at American Baker back in the day, which wasn't that far ago, by the way. 20 years there. But the podcast is really, really good. I thought your interview was Cuban, and I told you this. I said that was a masterclass. You prepped, you were ready, and he's a hard interview, in my opinion.
I was nervous. I was really nervous. I was like,
he has a personality, right?
Yeah.
I mean, Mark can take over one. You had the follow-up questions ready.
So I'd prepped, as you said. I was ready for anything. And I had about 1 million questions, and I thought, how long is he going to give me? And I was worried it was going to break down. I was worried there was going to be audio problems, all sorts of things. So it was nice that it went so well, and he was very gracious with his time, and frankly very gracious with me, and we've had an opportunity to talk a little bit afterwards, so that's nice too. So that's I've been trying to be helpful to him and connecting him with folks that I know in the banking industry. So
yeah, folks, I would honestly say, and Rob, I think you might back me up on that. Keep an eye on Cuban. There's something boiling there. You can see it. He's only 60, I believe, about 60 years old.
You've got Jill on the program later this week, and she can tell you about it. But she just did something else with Mark Cuban last week, and frankly, that's just both of them showing the kind of leadership that I wish we would see other places.
Yeah, think about that too, because let me put this in perspective. Mark Cuban, been a billionaire for a long time, owner of the Dallas Mavericks, very outspoken, and you're talking Jill Castillo, president of a single branch, one branch outside of Oklahoma City. It's just one branch. And every time I say that, people are like, really? And, because I've had a lot of, well, can we work with her? Can do everything else? And the bank only has an asset side of about 300 million. That's nothing in the U.S. I mean that politely. What she has done is swung so outside of her weight as an institution, as a person. That's why we're about to have her on twice. That's why Rob had her on as one of his very first guests. Jill is a gem. And they're out there. There's Jills everywhere in the community banking space, by the way. Oh, folks, we're out of time. I went incredibly long, so I apologize. Rob, best place to find out about you. Say the podcast name again.
It is Banking with Interest, and I just dropped it in the comments.
Excellent. And it's a fantastic podcast. And what about the Promontory Interfinancial Network? I didn't mention this is part of IBM, right?
No, actually, there are two different promontories. And so there's Promontory Financial Group, which is part of IBM, and we're Promontory Interfinancial Network. And we're
there you go.
Those guys.
Yeah. So
and you can find more about us at www.promnetwork.com.
Yeah, and that's an important distinction. I had a couple people from London asking me if that was the one. So make sure, unlike me, what I just said, get the distinction right. All right, folks, that's it. I'm up against it. Tomorrow, I'm joined by a good friend of mine, Joe Brady. Joe is from the Instant Group. He's the CEO of North America. Joe used to be with JLL. If you know anything about commercial real estate, you see JLL's name everywhere. He ran commercial real estate for Walgreens globally. I want to talk about the impact of COVID at the new normal. What is commercial real estate? Its impact on financial services. Think about Manhattan. Think about downtown San Francisco, downtown Charlotte, downtown London. What the hell is the world going to be like? And what does Joe see it's going to be like coming out of COVID? If you know anyone else who'd be perfect to come on the show, don't hesitate to reach out to me at Sam Maule on Twitter, or sam@11fs.com, or breakfastshow@11fs.com. Everybody, thanks for the questions. Thanks for being here. Rob, thanks a lot for doing the show, man. I appreciate it.
Sam, thank you so much for having me. And that show tomorrow sounds fantastic, by the way.
It will be. Thanks, everybody.
Thanks.